we have a very basic question about, what you guys are doing. And in simplest terms, what is a tax credit and how does that vary with a tax deduction?
That's a great question. We get that question a lot. So I'll kind of share a story about how I got into this in the first place. So when I was coming out of school, I joined PwC out of college, and I was kind of told, hey, you got to pick audit or you got to pick tax. And so I said, well, I don't know. My professor was like, hey, just say tax. You want to get a good job. So I said tax. I went into tax, and I was doing tax compliance. So you could think of your own personal return or a corporate return. You have revenue, and then you have things that deduct from revenue, deductions, and then you have taxable income, which is sort of like your profit on the tax side. And you have a tax rate. Right now, the tax rate corporate is 21%, and that gives you a tax liability. You got to pay that tax. Now, there's a credit below that. It says, okay, now you have tax credits to offset your tax liability. So that's the difference between a revenue and a deduction, takes away from your tax revenue. And then the tax credit is actually a dollar for dollar offset of your tax liability. So it's very valuable credit.
That's
So
the key.
that's a really quick, high level,
Yeah.
difference between a credit and a deduction.
Yeah.
The value of a deduction is sort of multiplied by the tax rate. The benefit it gives you is multiplied by the 21%. So if you have a $100 deduction, that's worth actual $21 if you were taxable.
Yeah.
Whereas if the credit is $100, the credit offsets $100 of tax liability, and
Got
that's
it.
worth 100, right? So it's definitely a valuable thing. But how I got into tax credits was, I got into doing these tax compliance. I had a very large corporate client. I worked on it all year long. It was my only client, and I just drilled and worked them through all these tax softwares, and I was like, wow, this is like really doing homework all day. I didn't really enjoy it. And I had another group of people who were doing sort of consulting work, and some of that consulting work while I was at PwC was involved with these tax credits, and they kind of said, well, we're doing this little bit different thing. And I said, well, what's that all about? And said, well, we have to talk to engineers and scientists, and we got to talk to lab people and software developers and all the kind of things that are happening in the Silicon Valley where I am. And I said, well, that's really fascinating. You get to go talk to people and go visit them in their physical locations, and then you take what you've learned from them and translate that in the tax code, support them with the calculation and documentation, which is something that ends up on your tax return. But it was a whole different environment. I had no idea that it wasn't just audit or tax. You had consulting. There's international tax, there's state and local tax, there's M&A. There was all kind of a different spectrum of possibility that I had no concept of. I chose this particular area because it was interesting to me. You had time to meet with people and talk to them about what they did, and it was fascinating. It was kind of like story time a lot of times. So I really enjoyed that. Kind of used different skill sets than the typical accountant. You think of people at Green Visor and they're stuck in a little room